Good morning or good afternoon, depending upon where you're joining us from. My name is Greg Cowett, and I'm the Director of Business Development at VersaFile. I am very pleased today to have Paulo Cerrone, Global Research Leader, Banking and Financial Markets at IBM. Today, he will be talking about trends in the banking and financial sector based on his research as part of IBM's Institute for Business Value. We'll also discuss real use cases that are applied to these trends using artificial intelligence and intelligent automation. So let's start by taking a look at artificial intelligence and how it presents the opportunity for intelligent automation. So we really, the reality is we're surrounded by, artificial intelligence all around us, from searching algorithms to virtual assistants to GPS in our vehicles. And in our daily lives, when we travel, or even when we work with email, we're AI is part of that process. So reality, artificial intelligence is becoming expected, even if we don't realize it. So this creates this huge opportunity, and one of the things that a lot of organizations are looking at, not just in the financial sector, but is really kind of understanding the customer's expectations and starting to tap into that potential to provide a better customer experience or a better experience for your employees, but in essence, starting to tap in and leverage artificial intelligence to drive automation and process improvement even further. So, how do we put AI to work with us in a way that will bring demonstrable business benefit? Now, what does that journey look like? What are some of the things that organizations need to consider before embarking on this journey? And one of the things that we do, very often when we're talking and engaging with clients, we kind of bring up this what we call the intelligent automation maturity model, and it's a bit of an eye chart. So I'm not trying to go into the whole detail, but basically when we talk to clients, what we find is that they tend to land somewhere in between 2 and level 3, maybe 2.5, 2.25, whatever it might be. But when we start to look at digitally born organizations, they tend to be kind of squarely in level 4, even moving into level 5. And these are companies that like Amazon and Google and others that were really born digital, and artificial intelligence is really core to their businesses and their platforms that they use to deliver their products to their clients. The point that we're looking at here is, if an organization sets out into starting to build out a program to bring artificial intelligence into your business processes and into your organization, it's typically about a 3 to 5 year journey to go from a level 2 towards a level 4. So, what does that journey look like, right? It's about discovering the possibilities. It's starting to step back and envision what an artificial intelligence or AI-enabled future would look like. And it's, establishing a process to deploy artificial intelligence, building some governance models around it so that you have a clearly defined program for how you're going to implement AI. But also you need to start to think, about how it's going to impact your employees and the people that work with artificial intelligence, and help prepare them for how they're going to work differently. This isn't necessarily about replacing them. It's more about augmenting them to take care of other tasks, to provide more background and information to help them make better decisions, and ultimately let them focus on more value work rather than task-driven work. And then that really kind of gets into the point as it relates to artificial intelligence ethics, right? You want to make sure that we're not looking at any biases within our AI models, and make sure that not only are we planning so that we're getting the expected results, but also to make sure that we're not exposing the organization to any potential legal liability or other social issues that might come into play. So really, as we started to look forward, we kind of talked a little bit about artificial intelligence and how that's used in the world around us. But what we're really going to talk a little bit now is how that applies to intelligent automation, right? So what is the difference? Well, artificial intelligence is, a branch of computer science that includes machine learning, deep learning and neural networks, natural language processing, computer vision, speech recognition, and so on. But intelligent automation is any solution that combines artificial intelligence with process and automation technologies. And really the objective and what we view as the goal is that it needs to deliver an improved client experience, reduce errors, minimize human involvement, and also reduce transactional costs. So, that's really kind of sets up, when we're talking about intelligent automation, it's about infusing artificial intelligence into your business processes. So to help organizations do this, we've kind of developed or leveraged different frameworks. And one of the first ones we use is actually developed by IBM, and it's referred to as the AI ladder. And really what this is about is when you start to think about artificial intelligence, it all starts with the quality of the data and making sure that your data is properly organized to basically address the business use cases and the analytics and the modeling that you're looking to and get to use to get the valuable information out of it. And so, we refer to it as a ladder, but it doesn't necessarily mean that it has to be each individual, it doesn't have to be done in sequence. You can actually do them independently or you can do them in parallel. So one of the key things that I like to talk about, because it's really about building what's referred to as an information architecture. And, there's a saying that there is no information architecture without artificial intelligence, and there's no artificial intelligence without information architecture. So just something to think about there. The other methodology that we came up with is really around what we call the 7 pillars of intelligent automation. And, this is really intended to focus not on technologies, but on business capabilities. And it's intended to, when we start to talk and evaluate business processes, taking the technology and taking IT out of it and focusing on the business requirements and the capabilities that are needed to manage and execute that process. And they really break down into these key areas, which is ingest, interpret, orchestrate, decide and recommend, and then execute. And then ultimately then looking to optimize and continually improve those processes. When we start to look at any process, it typically starts with the 3 key areas. One is around ingesting, or basically getting that information into the business process. And that's typically where the digital transformation takes place, right? The orchestration of that process to go through the various steps that it needs to do, and then ultimately execute those steps for the final outcome. And, as we talked about before with artificial intelligence, it really is all built around data and the importance of data and AI. So one last thing that I'll touch on here, because it's one of the things that we think is really kind of one of the biggest area where there's the largest opportunity to help introduce artificial intelligence into your business processes, and that's around decisions and recommendations. Because the reality is if you can begin to automate, start to provide some predictive or next best action around your decisions, once you've done that, then you can start to tag that into any process across your organization, whether it's part of an external workflow process, whether it's an external application, but it provides the most value and the biggest opportunity to drive intelligent automation towards improving your business processes. So with that, I'm going to go ahead and hand it over to Paolo.
Hello, everyone. My name is Paolo Sironi, and I represent the business research of IBM for banking and financial markets as part of our thought leadership center, IBV, the Institute for Business Value. Most of the content of my presentation today can be found on our web pages, ibm.com/IBV. So I invite you to reach out to our webpage and see our material, which is cross-industry, but also specific to banking and financial market participants. What I want to talk to you about today is the content of our global outlook for banking and financial markets, which is a paper that we publish at the beginning of every year, serving our international experts worldwide about which are the key trends or initiatives that characterize the work of financial institutions internationally. And I want to do this by connecting the dots between the global outlook for banking and financial markets and how the infrastructure, the business architecture of banks and financial institutions is transforming, looking at the core of this slide, that is the inversion of the business architecture pyramid, where yesterday there were higher costs at the level of the infrastructure and the system of records and the lower return at the system of engagement, but tomorrow there will be the creation of a more agile, flexible, and modern architecture that underpins the whole work based on the system of records to deliver more returns and resources to the transformation of the system of engagement, the system of experience, and the system of insights. And last but not least, I will spend a couple of words telling you what we see in terms of the innovation key areas, which have been characterizing financial institutions this year and certainly a bit for the next year, in between digital experience, unlocking the value of data and AI, the digitization of the operations, as well as the modernization of applications, and to conclude, the deployment of flexible IT architectures. So then let's start discussing the content of the Go BFM 2022, so the global outlook for banking and financial markets. You will find a point of view which goes around 10 key imperatives that I will present to you in a moment. But all in all, we can distill the key insights into three major areas. We learned in 2022 that financial institutions are finally embracing extreme digitization, given the lesson learned from the pandemic. That means in the past, digitization were focusing more at the level of the customer interface, so the last mile in front of the client. But now more and more we see that this is about end-to-end automation, so extreme digitalization that involves business critical processes like the credit function. Of course, when digitization becomes so extended, the importance of data and AI is increasing tenfold, if not more. But that requires to change the approach to data and AI. So we see that financial institutions started at the beginning of this year discussing and considering the concept of the AI factory. So it's not just about building best-in-class analytics to resolve this problem here or that problem there. Is about building a practice where data and AI can be effectively infused in most of the transformational processes as extreme digitization leads the way. Of course, and that's the last key message, that cannot happen with the existing infrastructure. So it requires basically to build a flexible technology architecture that is based upon modern hybrid cloud techniques, so that the value of data and AI can effectively be unlocked while resolving the complexities of extreme digitizations to harvest all of the benefits of the transformation of the business models. And these are the 10 key imperatives which are described in this global outlook for banking and financial markets. Once more, I invite you to go to our ibm.com/IBV pages and download this report looking at the banking and financial markets section. So our expert sense that, first of all, the macroeconomic conditions were a very relevant challenge for financial institutions. And if you think that we discussed this at the beginning of the year before the Ukrainian war, before the realization of increased inflation, you understand that this issue has been intensifying throughout the year. And this is also coupled by the fact that new competition is entering the industry landscape. In particular, we've been doing quite a few relevant work with institutions around the generation of the creation of the orchestration of ecosystem platforms. So basically the creation of new revenue streams by embedding financial services into non-banking ecosystems. The acceleration of the digitalization is a key lesson learned from the pandemic. We know that most clients embraced digital in financial services way more than in the past, in particular in the Western world, where the consumers were a bit less inclined to use digital compared to their APAC counterparts. But we also saw that this engaged all actors, also the employees as well as the partners, to face the complexities of the lockdown. And that's why the fourth imperative is about workforces and workplaces. In particular, we realized that the definition of the workforce changed to embrace the contractors in different ways, looking at how digital workers leveraging the automation of unformatted data analysis would be basically transforming the overall interaction of individuals, partners, and technology elements through an extreme digitization end-to-end automation process. New uses of data and AI, we want to spend some words in a moment. As I said, is the transformation towards the data and AI fabric and factory. Viable sustainability is a key topic, which is engaging the industry, every industry. IBV just released a CEO study where we interviewed the 3,000 CEOs of corporate worldwide, of which 300 were from banking and financial markets businesses, more or less, investigating what motivates and how they are addressing key challenges across the different industries. The emergence of digital assets is another key trend that we saw across the board, in particular the discussion around the central bank digital currencies and some early stage implementations. All of the central banks are involved. Rising security and fraud is a key concern for banking and financial market institutions, especially in facing such an acceleration of digital transformation that poses a lot of questions and concerns, as the broader you are on cloud, the more connecting points you have that can be weaker than you believe. So it is very important to readdress and reassess continuously the security posture with a particular focus on resiliency. It's all about cyber resiliency in essence, because we can find ways to minimize the potential impact of a security threat. But what matters is that if we are not capable of basically shielding the system from an attack, the intensity of that one is minimized in terms of a negative impact. So the system remains resilient, and the attempt to building back access from customers and partners or employees is minimized. And the last but not least, the new ecosystem architecture. So it is all about engaging with partners in different way, enabling them to contribute with a more secure and faster process to the transformation of the financial institution. Here we see more examples also in the marketplace. Now, I said I want to focus on two of these imperatives, in particular, the new uses of data and AI. We worked with IEEE, which, as you know, is an industry body that defines education standards for technical experts, in releasing a book, an extensive report, which is about ethics in the application of artificial intelligence solutions. Now, ethics is at the foundations of everything, because it means that the financial institution is capable of addressing any potential bias that might distort the utilization of data and AI to run the most business critical processes, such as lending operations, mortgage operations, just to mention some of them. So what matters here is that there is a novel understanding on how to build the AI factory, which is grounded on the data fabric and the data factory that starts from the ethical aligned design and lands into a data AI governance in a circular process. We have identified these 9 pillars that constitute a process of designing the data and AI factory that enables us to modernize all data environments and leverage all the analytics and build new effective and ethical governance models that can balance the efforts between the data owners and the necessity of the users. So all of these are important. There has to be a clarity around how to implement all of these to make sure that effectively data and AI can scale across the organization, and that's what we see banks and financial institutions starting to organize themselves around this. You can go to the IEEE pages to take a look at these financial services book for artificial intelligence solutions, or reach out to our ibm.com/IBV pages for more insights on how this can be applied to your client. And then the new ecosystem architectures, that's extremely important. In the IBM CEO study 2021 that was dedicated one last year to the impact of the pandemic, we surveyed 3,000 CEOs asking them what really matters, what's important for them to resolve the issues that were created by the pandemic and make sure that they are better positioned going forward to excel under very uncertain environments. And one of the evidences that we found in serving all of these institutions worldwide is that partnerships were key. All of those institutions that declared were more advanced in terms of working with partners on new ecosystem architectures were outperforming their peers. So now we see that the job is not done yet, so that means there's great potential, and that goes through the engagement of partners, as no institution will be capable of transforming completely. That means without the aid of people that work around the institution, but it also means that the automation of some of the business critical processes might, if you like, breach the borders of the institution, which poses a lot of issues and questions in terms of how automation can be effectively performed. So the relevance of building new ecosystem architectures that are based on monolithic, that are not based on monolithic, complex and inflexible operations, but flexible operations that can radically lower the cost with exponential technologies. Now, this is basically the story, if you like. What we are seeing is that banks are required to move from an environment where the cost-income ratio is very high to an environment where they are lowering the cost-income ratio to more sustainable levels. And at the same time, they are constrained to low return on equity because of macroeconomic conditions and the complex competitive environment. And they need to find a way to unlock value to basically generate higher return on equity. That really means inverting this pyramid, where the efforts and the intensity of cost and actions move from the bottom of the pyramid to the top of the pyramid, where the client engages with the financial institution. Therefore, most of the new business models and experiences can be built to transform the perception and the consumption of financial services. Now, how are the banks doing this? Well, we really identified 4 key innovation areas. The first one is about the digital experience. So accelerate the banking transformation by creating new business models, transform the way customers are engaged, but encompassing, of course, also employees and clients. Now, it is not possible to engage customers differently if the way employees work is not changed as well. That requires a transforming talent by reskilling, upskilling, and changing the operating model so that is more functional to the new engagement mechanisms and especially the new business models. Second, all areas around the unlocking of the data and AI value, which is about the modernization of data and the scaling of AI across the organization. The third is the digitization of the operations, and the modernization of applications is not enough to move to cloud. What matters is that operations are transformed and applications are modernized so that employees, partners can interact differently with the technical components to create better customer experiences and accelerate the digital transformation. And of course, the modernization and management of core business operations, we really saw that banks are starting to transform at the level of the core banking. So it's all about orchestrating and optimizing the extended workflows across a distributed workforce in a dispersed workplace. So more automation, more understanding of how reading and interpreting and formatted data can connect the dots in different ways to allow people to work differently, so to deliver different value to the clients. Once more, I thank you for the time you dedicated to listen to this short presentation. please go to ibm.com/IBV. You can find the 2022 Global Outlook for Banking and Financial Markets and more material, more thought leadership material of the Institute for Business Value.
Thanks, Paolo. Appreciate that. So one of the things, just to kind of wrap this up a little bit, I kind of want to talk a little bit about, what are some of the use cases in financial services and banking today. And really the top ones that we see are around virtual assistants, regulatory compliance, fraud and anti-money laundering, and then, some of the more complex lending scenarios or higher risk, such as, small business or small medium enterprise lending. A couple of different examples are around virtual assistants. Some of the metrics and KPIs that we've seen have been that banks end up really find that for every query that a chatbot handles, they save around 70 cents per query. And a lot of banks and virtual assistant systems, especially client facing, will handle as many as 30,000 queries a day. From a regulatory and compliance perspective, the ability to really look at, by automating some of those processes, they can drive savings of up to 80%. And a good example of that is really around fraud and anti-money laundering. We're really, the opportunity, if you could take 95% of the alerts and identify them as false or low risk, then that allows your underwriters to basically go back and look and screen what are probably more likely probable violations or fraud attempts or gaps in your AML processes. And then the last one is really around, SME lending. And it's, when you start to think about the processes of filling out a loan and the information that's needed to collect to properly come in and drive, in essence, come in and make the proper decisions around that. On average, they estimate it's around 30 hours. If we can start to take 82% of that and pre-qualify those and where they would be denied, and let your team focus on the remaining 18% that can actually transition in business and bring value for the organization. So a couple of examples of different use cases are really, built around the Royal Bank of Scotland. They worked with IBM to build their customer service chatbot called Cora to revolutionize the user experience in the age of digital banking. With the success of this, they actually started to continue to extend that and then work to develop a bot they called Marge. It was a tool designed to work alongside agents internally and help them find accurate and relevant information stored across the various RBS departments and systems. The second one is Blue Shore Financial, and they achieved operational excellence through intelligent automation with a focus on operational effectiveness by automating business processes and collapsing business cycles. Through their business process review and re-engineering process and applying the IBM automation platform, they fundamentally rethought and redesigned their business processes to achieve dramatic improvements in cost, quality, service, and speed. Another example is a top 10 global bank sped up AML investigations by 200%. And by providing greater insight and eliminating duplicates, analysts could focus on the truly suspicious behaviors and quickly resolve low-risk alerts. ING and Cabbage partnered together to provide small businesses in Italy and France real-time access to working capital via the Cabbage platform. Since Cabbage's technology is fully automated, this partner allowed ING to expand into new markets without increasing operational costs. So let's take an example of a use case here.
So UBank is an Australian bank that sells simple deposit products and simple home loan products. But we consider ourselves a fintech with a banking license. And that really gives us that focus on disruption and thinking about the customer experience first and the banking component second. The idea behind RoboChat was really born out of the business need to improve our home loan offering and ultimately helping more customers get through the application process. RoboChat started with a hackathon, and the hackathon was run using people from right across the UBank business, and that carried through right through the projects. And with something that's fairly short and simple sounding as a chatbot, it actually involved the whole business. So we had marketing helping us with tone of voice, product helping us with the product questions, risk and compliance and legal, making sure that we were getting the answers to the customers in the right way. And we find bringing everyone along that journey right from the beginning makes that transition to production easier, and we have great support from right across the business. The toolchain we used for RoboChat was largely the IBM Cloud DevOps toolchain. But the great thing about the IBM approach with its DevOps toolchain is we can incorporate existing parts of UBank's toolchain into the IBM solution. So we actually have a hybrid toolchain that is seamlessly integrated into the IBM Cloud platform. One of the great features of the Watson Assistant tool is it's really easy for our business to use. So while our developers have built the orchestration layer for us, the front-end tool and the chatbot logic and answers are all built in a very easy to use fashion. And in fact, it's our business analysts that review the logs and make the changes themselves to the chatbot rather than needing to involve the development team. So we've found customers pretty happy to engage with RoboChat from the moment that it launched. We've been really transparent to our customers about the fact they're talking to a chatbot and that chatbot is in beta. 4 out of 5 customers are happy to engage with RoboChat. RoboChat's answered over 20,000 questions, and it's now getting the answer right more than 80% of the time on the first attempt. And lastly, from a business perspective, we are seeing significant uplift in conversion rates for those customers that engage with RoboChat. In fact, we're seeing about a 15% uplift for customers that engage with RoboChat.
So that was a good example of UBank, which is an Australian digital bank. Next, let's talk about a use case around process automation at TD Ameritrade.
On this digital business automation journey, we recognize that most of TD Ameritrade's business processes were inefficient and generally involved associates working in multiple systems and doing a lot of manual labor. The account opening process, associates interacted with as many as 6 different systems and had to rely on heavy training and procedures in their heads to make all the right decisions. IBM's technology aligned very well with what we were looking to do. The first process we chose to re-engineer was the institutional money movement process. It was a high-volume process that involved a lot of manual steps, toggling between multiple systems. The move money process was 40% more efficient after re-engineering. What took minutes to do happened at the click of a button and was accurate 100% of the time. Our retail new account opening, we got a 30% lift in processing time. And then for institutional new accounts, we got north of a 50% improvement in processing time. Clients of TD Ameritrade can apply for margin and option on their account, which gives them the ability to take a margin loan or trade options on their account. And every time that a customer would apply for margin and option, it would trigger a manual review. We were able to leverage IBM's ODM software in order to set up rules that would auto-decision nearly all of the margin and option requests. After we got all of the rules installed appropriately in ODM, we were able to get a 97% straight-through processing rate. After we installed the margin and option solution, the COVID pandemic hit, and that drove up volumes because of market volatility. Had we not done this, it would have generated a lot of overtime, a poor customer experience on backlog to get the requests fulfilled. We have re-engineered 15 different processes using the BPM software and the ODM software from IBM. We are saving north of 400 equivalent FTEs worth of labor. Our experience with IBM has been outstanding. Their client focus was outstanding, their knowledge was outstanding, and I think the results of the project, that was a partnership between TD Ameritrade and IBM, speak for themselves.
Great. Well, I hope you found that use case informative and useful. Really, in closing and what's next, there's some available information that we can provide for you around the 2022 Banking and Financial Markets and Industry Report that Paulo was part of. Glad to share that with you. In addition, if there's some interest in looking at the AI ladder, we do have a workshop as well as a modernization and intelligent automation workshop. Would love to address any questions that you might have. My email information, if you go over the QR code, will bring up my email address, and you can send me an email. So would love to engage with you, and let's start a conversation. Thank you very much for attending.